Hey guys, just adding a quick snippet in the front of this video. I actually filmed the video, now I'm just adding this part in. Just wanted to say that today's video is not a deep dive, more on the overview of 42 or so positions in about 20 minutes, so pretty rapid fire. It's like literally about 30 to 40 seconds per position. So it may not be as valuable to you as I don't go into any details. It's really like almost like a Twitter, like 140 characters for each position. Anyway, the reason why I'm doing the video, it's really for me to see what I get right and what I get wrong over the next 6 months or so. Because what I do is I rewatch these videos to see if my thinking is right or wrong, right, and see where I could improve. So that's kind of the purpose of this video. It's a little bit different than others. You guys might find it interesting. I'm really going really quick through them. So anyway, just a heads up on that one. And yeah, let's get into it. Hey guys, Freaky Finance here. 2 days ago, we looked at AT&T and Discovery deal. Today, we're going to do a shorter video, just like an update. I kind of do this exercise every quarter. The reason why I'm doing it and doing a video on it is because I have an extra day this week because it's a long weekend for me. So let's get to it. These aren't in alphabetical order, though they're kind of by account order in alphabetical order. So we'll start with Aberdeen. I did a video on this one, I think, to you guys. Kind of like a fixed income. It's really my only fixed income play that's left. Recently, it has to relocate out of the Caymans. It's not performing as well as I thought it would, but I'm still getting a 9% yield, and I've held that for 8 years. So still a decent amount of fixed income there. More importantly, it's diversified for me relative to my other positions. A lot of holdings are in India, a lot in Malaysia, a decent amount just in Southeastern Asia in general. And that also has some random exposure to sovereign debt in Africa. Kind of all over the map. That's an interesting one. I'm going to try to go fast because I got about 42, I think I counted. So, Alimentation, that one I picked up when the France deal fell through. And it tanked like 10% that day, even though the business is just the same. So I bought that right away. I saw that, and I think that's an easy buy. That's kind of like a reopening. It's like a convenience store play. And the convenience side's done well during COVID. It's the fuel side that hasn't done as well. We'll have to see if that picks up. It's kind of like a quasi-reopening play, but I think you're still getting a very cheap valuation at Alimentation Couche-Tard. And Tibi Therapeutics, still in it. They recently diluted the share base in order to amalgamate the holding code to get the full IP. Just strengthens their partnership. Just imagine you're a company and you're like, could be a non-starter for negotiations. So I think this makes sense for them. I feel at the time it sucks, right? Because you're diluting the existing base. But now the company has the IP, which is, in my view, important. Anyway, Argonaut Gold, already talked about that one. Just a standard gold play. Its capex is very high because it has a mine coming out in mid-2023. A decent ASIC mine, but Argonaut Gold itself, as of right now, is a high-cost miner. Birchcliff, we haven't talked about that one. It's just another nat gas play that I picked up during the COVID panic. Canopy Growth, that's a very old position of mine. I kind of played the Canadian LPs before MSOs were a thing, and this is just a legacy position that I like to keep track of. Columbia Care, this is going to be an interesting one. All these cannabis companies, sans Trulieve, we should start seeing a ramp up in New Jersey. How that works out should be indicative of how New York may work out. It's not necessarily true, but that's what I'm going to look at. One of the things I liked is that when Illinois went legal, we saw an increase in cost. An increase in cost kind of spooked investors, and the share price actually went down. People not realizing that the increase in cost was the build out, like hiring the people to get in place for the launch on the January 1st. So I'm hoping we get like a similar pullback in that. We've kind of already had a pullback from the February mid peak for cannabis stocks, but that was in general for high risk growth, right? First Capital, that one I still think is worth over $20. Its NAV's over that. Again, it has a lot of development, like a lot of its assets are in development, and given how high development costs have been over the last year because of our reflation idea theme, that's probably one of the reasons why it's not. The dividend yield's low, but that's because they're putting the cash into their assets. Grand Columbia Gold, this was a disappointing one as well. I feel like it should be higher than this at 1800 than something announced. Kind of languid. The company's done some interesting transactions. Honestly, I have to revisit this one because I haven't looked at it for, I want to say, 6 months. Green Thumb, again, that's a similar one. Well, not similar. They're all cannabis companies are different, but they have a similar theme that I'm going with here. And Green Thumb was the Illinois play. They also have a decent footing in New Jersey. So again, the same idea. I'm looking to see how they perform in New Jersey, hopefully for a pullback because they increased the cost before the full legalization for adult use in each state. New York City is going to be interesting as well. New York in general, rather. The China ETF, I'm surprised this is actually down. I think I've held this for, I want to say, since the summer last year. So to be down 6% for China, which is actually the only country that grew last year, it's kind of exciting to me. So I'm going to keep my eye on this one and see what the top holdings have shifted to. there is a lot of tech in there, so it overlaps with the tech play that I'm trying to get into. So this might be a safer way to me to play it without trying to pick winners in a competitive space. Emerging market ETF, that's one that I might get out of. OGC, so Oceana Gold, I kind of talked about that. Philippine story. Gold went from 1200 to 1800, even to 2000, and I've never really seen green on this company for me. It's just this tells you the importance of critical minds play in a portfolio of assets for a given company. So anyway, that mine got pulled out from under them, and it was their lowest cost mine. Still riding it out. They're starting to turn it around, but we'll see. It's still a former of its shadow self without that mine in the Philippines, in my opinion. A2 is kind of like Birchcliff. It's the same thing. I bought it. Nat gas was getting sold like crazy during the COVID panic. I view nat gas as still fairly bullish for me. It's the natural replacement for coal, and it's the next best thing to renewables. And some of the technology nowadays is pretty much reducing the carbon footprint to 10% of what it used to be. So I think nat gas is a logical, reliable play for a lot of things. And if oil does suffer, I mean, nat gas is a byproduct of that. So I'm actually more bullish on nat gas than I am on oil. Slate Office REIT. So this one is a smaller position. I've held it since before COVID. So it's still down 21%. I'm going to revisit it. Some of the occupancy is lagging, but I'm getting 9% each year. Will I wait? I might revisit it and add to it. Really, I'm surprised it's still down 20% because I remember seeing the cash flow, and it's not like they were down 20% of cash flow, right? I know occupancy has lagged a little bit on the Atlantic side of Canada, but I want to double check because I think they have some interesting Newfoundland assets. Suncor, I'm still surprised it's under 30 when WTI is over 60. This thing's starting to get off a lot of cash. We saw that in Q1 2021. We should see that again in Q2 2021, given where oil's been for already more than half of the quarter. The good thing about that is that the company already generates a lot of cash flow, so it's going to keep buying back its shares, and as long as the shares remain depressed, they're going to get more bang for their buck on the buyback. So I'm not worried about that. Balance sheet's still good. Trulieve. So this one's interesting, right? They had the Harvest acquisition. That kind of threw me off in my head because I always kind of viewed Trulieve's strategy as like they had Florida, and then they were planning to do this like hub in northeastern United States, and then all of a sudden they did a pretty big Harvest acquisition in Arizona. Every cannabis company is trying to do their own thing, really. So they have to play by the rules of each state, and some people are deciding to enter certain states and some people are not, right? So it's kind of interesting to see this play out in real time and which company's going to win. I don't really know. That's why I have 4 of them. Alibaba, I did a video on this like 2 weeks ago. From a China tech perspective, it's very cheap. You're getting the same PE as the average American company, but this company is actually growing 30% a year, right? Again, you have the regulatory risk. I'll scroll up so my head's not in the way. Baidu, this one also is viewed as the competitor that's losing to the other competitors, so they view kind of like Baidu as like, because they had search, which is shrinking, and a part of that is because these super apps have search built in them, so they don't need to leave the app to search the internet. One of the reasons why I bought it is it has this AI potential, it has decent cloud exposure, and it has a lot of other assets. Like they bought YY, they're trying to do stuff, right? And the PE is 18, whereas the other ones are very high, except for Alibaba, or some of them don't even have earnings yet, right? Baidu is kind of currently getting priced like the underdog that's losing to the competition. I'm going to keep my eye on that one, but it's nice odds. And they do have the autonomous vehicle, and I'm not sure if like China investment in infrastructure actually helps Baidu like it should in my mind, because that way the cost of getting autonomous vehicles on the road is kind of burdened by society in China, and then this company can help execute on the infrastructure made by the CCP. But we'll see if that plays out or not. Big commerce, that was probably the worst timing for me. They signed Walmart, kind of like Shopify, but open SaaS. So Shopify, if I wanted to make my own store, I could do it fairly easy on Shopify. On Big Commerce, it's open SaaS, so you would almost develop your own website using their tools. It's kind of like more of like an open sandbox. That's, I guess, how I explain it. I'm not really doing it justice, but trying to go really quick here. I still like it. Currently, it's still very expensive. So the risk when you buy expensive things, you get hit pretty hard, right? Down 27% there in, 3 months? Dario Health, this one's very interesting to me. They just had their call a little bit ago. Pipeline's now 700 million. When I did my video, it was 600 million. Revenue has started to accelerate because they only did $8 million in the 2020 year, and they just did 4.7 million pro forma in the first quarter. See that acceleration. Part of that is acquisition, a part of that's internal. They're starting to sign contracts, so I'm going to keep my eye on this. If they truly can execute on that 20% a year, right? 20% to 700 million is a big increase from the 8 million they just did last year, right? So that's kind of like a long shot play. But if it's right, this thing could go my average cost is 21, but I mean, this thing could go over 60 easy if this is actually going to happen. Expedia, again, just standard reopening play. There's going to be a lot of travel going on. We started seeing that in Dufry's. I listened to their call as well. They were kind of talking about how May in America was very strong, or at the beginning of May rather, and April even. Starting to see good things there on the opening side. Good RX, I'm surprised. Well, I shouldn't say I'm surprised. This thing was trading at a multiple of revenue as well, so I overpaid for it probably. In hindsight, I still think this is going to be a hidden recovery play as people go see the doctor for their normal ailments and they're going to get prescriptions. I think that's just the base play, right? We'll have to see, though. It has to grow into it, and if I'm wrong, then it's going to be very wrong. Intel, for whatever reason, this company keeps me up at night more than other ones. I'm constantly trying to keep abreast of what's going on at Intel. They did guide to shrink in 2021 versus 2020, both in rev and EPS. I'm hoping that I get a good entry in 2022 if the media panics. Like, it's not news to me, they already guided down. But if it leads to more of this, like Intel's doomed, they're shrinking year over year, AMD's still growing, Nvidia's still growing, right? I want to be there for that. I mean, we'll have to see their foundry service plays play out. That's a bit down the road. I do think they have to come back because ARM is currently superior. Like, you saw Apple make their own chip using ARM technology, which has reduced instructions, whereas their x86 is complex instructions. Complex instructions generally is less energy efficient. So I think that's one of the things I gotta watch in the data center is if, say, Kathy Wood's right with Intel going from 90% market share to something like under 20% in, 10 years or something, then that would be pretty bad for Intel. But at the same time, they have Mobileye hidden in there, which is not appreciated in their valuation at all. And she still thinks Tesla's going to win autonomous driving when I think Mobileye's already won. They just don't know it yet. Invitae, this is an interesting one for me. Ideally, because it's not cheap at all, right? It's another high growth genomics play. Ideally, it'd be nice to get this in the 15s to 20 range, but who knows? It should get there. Like, it could get there, right? You never know. This thing is very volatile. My own opinion, again, is I think the personal genome map will likely be a standard of care in 2035. I'm not sure if Invitae will be the winner there, but they are marketing themselves well right now. Lumen, so this company was the fiber play. I mentioned how fiber at AT&T was growing. It's kind of a play on fiber for Lumen Technologies, and I'm getting a better yield than AT&T will once their deal closes in mid-2022. Bingo though, technically it's growing very quick, but you're paying for the growth, right? So again, this entry isn't going to be perfect, I'm pretty sure, right? It should be pretty volatile. It is growing a lot, but we'll have to see what's going on here. I mean, so far it looks very good. I've already talked about it really quick, kind of like the Costco social feel, where you group together to buy things, and you can buy it in bulk, kind of like Costco. It's a very cool app. It's all mobile. A lot of growth. Anyway, back to real thing play, we have American Hotel REIT. That call was interesting. Talked about a strong April and May, first week of May anyway, and they showed a solid March in the quarter. I do think if occupancy does get to like the pre-COVID levels, this thing should be $7 or $8. Currently still only at $445. But yeah, the trend was very positive for April and May. That one I'm excited about. Curaleaf again, the biggest footprint, wholesale. We'll have to see what they do in New York City. They have a decent medical exposure there already. That's going to be a fun one to watch. Like I did kind of when I went through the cannabis companies, I think during the Columbia Care video, their SGA didn't scale as well because they're kind of everywhere at the same time, so it's harder to see that scale. It's not proven yet to me, that's why I haven't put as much in, but if I can get like a decent, like say if their costs increase because they're building out New York again, right, ahead of time, shows up in the numbers and people panic, then I'm going to buy. Enbridge, did a video on that one. I still think it should pick up in the back half of 2021 once the upgrader on line 3 is completed. There's still drama on the line 5 risk in the Great Lakes. And Power, still trading at a discount to NAV, has started to outperform the financial peers since when I did the video. Part of that is because I think the Wealthsimple is re-rating higher, which they have controlling ownership of. Synopta, Oatly went public this week. It's getting a lot of hype. Listed on the top end of the range at like 10 billion. That went up like 30% that day. Shows you how hot oat milk is. Synopta is underappreciated because it doesn't have that same brand power that Oatly has, or allegedly that's the case. We'll have to see with private labels, right? I think what's going to happen is Oatly's going to push the market open, right, with their marketing and spending on marketing, where people may not know it, but oat milk's already outselling soy milk. And so if Oatly just spends a lot of their IPO cash they just got and just markets it and gets it out there, I think Synopta's going to ride on the coattails of that because they are the private label. And once they see the success of the oat milk, a lot of these private labels, and they're already starting to, are going to jump more on the bandwagon as the overall market increases in size. And they're going to contact the people that have capacity. And right now, the only people that really have capacity are Synopta and Oatly, and even then it's kind of constrained. They're both building out capacity. So it's kind of like DBI. I don't think I've done a video on DBI, but I own both. They're both like shoe plays for reopening. Thinking it goes 38 or 40. Capri with another reopening play. Partially played out. I need to revisit this one. I haven't looked at it in some time. Kutech, there's actually 2 on this page. I've added into it on a different account, a taxable account, but This one, they have earnings on June 3rd. I want to see what their results are for Q1, but more importantly, their Q2 guidance, and see if management is BS or not. Because I showed that email where it kind of said that they're still thinking they're going to do more in revenue in this year than they did last year, even though Q1 was going to be very weak. Who knows? Maybe I'm hanging out to dry here, but we'll see. My biggest loss, I think, this year. CRISPR Therapeutics appears to be the patent winner in Europe. Usually, US may actually be Editas. They kind of license it out to Beam as well. Kind of like a California versus Harvard, MIT competition in America for the patent rates. It would be nice to get Beam cheaper. I am looking at Beam right now. EBI, I already mentioned that. It's kind of like reopening for shoes. This one's played out a bit, but it could go quite a bit higher. iHeartMedia, top broadcast producer. Not that many people know that. May also get an uptick from its traditional radio business as people drive back to work. That's kind of the prime time for radio, right? So the world goes back to reopening. That could be hidden in the numbers too. But I have to revisit that as well because it's partially played out. Nat Gas Services, it's just a compressor play really in Texas. It's a small cap. It's a cash machine. Basically, it buys compressors and rents them out. So depending on how the rental fleet is aging or not aging, this thing generates a lot of cash flow. It charges based on horsepower. So it's pretty cool. And it has zero debt. So much cash, I'm surprised they're not just buying back their shares. I don't know. Walgreens, next Q should be interesting with UK Boots because UK has kind of been ahead of the curve on vaccines. SGA cost cutting is still in full sway and it's playing out pretty well. So we'll have to see what happens with Walgreens. It's kind of been tooth and nail to get it back up to 38% because people are just selling this off. Advantage, starting to perform well. It was lagging the other nat gas plays for a bit. Did enter into some hedges that I'm not happy about. It really gave away like a third of their revenue in Q1, non-cash, but a lot of these unrealized losses from hedges just destroyed their earnings for the quarter. Though again, cash flow wise was fine, and it has a good balance sheet. And they did have a carbon capture technology, which is one of the reasons why it started catching up to the other performers. And I kind of view that as a side avenue to get value. But it should become more valuable with carbon taxes increasing in Canada. People would start using this technology, and maybe Advantage can start selling it out to people. SoftBank, I got this one because everyone was harping on SoftBank's horrible investments or whatever. So this thing can be very volatile depending on the media. I find it good exposure to venture capital and deals that I'm never going to be privy to, right? Freeport, again, still performing well in Indonesia mine. I think it's still a steal at current copper prices, though again, you don't know what copper prices are going to be tomorrow. Part of me would say if I was them, I'd start hedging some of the production out at 450. That's where the spot is, right? Because they really make a killing, right? And EBITDA could get as high as 14 billion a year, and debt's slowly approaching zero, and they still have a market cap under 60 billion. So, I mean, technically, it's pretty sick, right? You're 4 and 5x cash flow. If you can hold the copper price. Vermilion Energy, it's a call option play. Sometimes you can find this misprice in oil volatility. The Vega is not appreciated. This is just a levered way to play a levered company, really. So this thing could backfire real quick if oil went back down. It's kind of what I wanted with this one because I thought it wasn't being appreciated. The volatility wasn't when someone sold me this. Because this is 2023 call option at $7, right? Got it for $2.30, and I think the share price was trading at like $9. So really, I was paying 30 cents for 3 years of theta or 2 years of theta. Anyway, AudioEye, very interesting company. The small one. I just started looking at it. I need more conviction. The sales growth does look good, but the base is very low, and the share price is already well above the revenue, right? So you're obviously pricing in a decent amount of revenue growth. The key tech add in, I did buy again under $2. So I'm starting to average into this loser. Hopefully management doesn't burn me on June 3rd again. But we'll see what happens. So I've started adding to this one. The reason why it shows up twice is they're in different accounts. Duty free play. I still view this one as underappreciated. I think that on the May call they mentioned tremendous pickup recently on America travel. I think this thing re-rates out of COVID, but I don't know when. They already stretched out their maturity for debt and Hainan build out. It's looking good. So they're executing well anyway, but it's not showing up in the Q1 numbers yet. But they're saying that they're starting to see a pickup in travel in May anyway, especially in Central America and North America. Jumia, eventually I'm going to start adding to this one. It's kind of very interesting. It could be a Material Africa winner. I kind of want to keep an eye on the brand loyalty of Jumia versus foreign competition. Technically, brand loyalty is kind of a difficult thing to measure because Jumia itself is also technically foreign, even though it's kind of been there for a while. So we'll have to see if the local public cares about that or not. It does only have $2 billion in equity market cap for a large segment. Again, doesn't make money. It is shifting though to be more of a merchant business. So now it's literally just becoming more like people put things on Jumia and they just facilitate the transaction, both on the finance side as well as actually distributing and shipping the good to the person. It's kind of an interesting play relative to the other e-commerce plays. This thing could go quite a bit higher. That's one I got to keep on. Luckily, our partners. I do think DARPins are going to be a standard of care at some point. So they just have no cold chain, treat COVID at site. It's a pretty cool technology anyway. And then we have Playboy, again, a smaller one. I have to revisit this one again just to get some more information. But yeah, I should likely add if it gets down under my price again. Literally, this thing I got a partial fill, I remember. And then it kept shooting up from my price. Like, I literally tried to get filled, and every time I put an order in, it just kept going up. And I was like, whatever, I'll walk away and do some more work on it. And then 10 cent again, this is the favorite. I might add again. It sold off on the week quarter it just had last week. In my eyes, it was weak. Just from the growth rates. So we'll have to see what happens. It'd be nice in my mind if I can get in the 50 to 60 range. Personally, I'd like to get in after the government clamps down on them. I view 10 cent as the super app, and if the government agrees with me, that's the one that they should hit, right? We'll have to see what happens there. Maybe the government just charges them in order to illustrate power and not actually shift the trajectory of the company, right? It's quite a bit to go through. So here we have positions. This is kind of how I just organize them. I might do this on another day, but overall, I probably need to find some utility company because I have fairly aggressive. I try to balance these to be within like 30 grand component max. So yeah, I'm going to probably try to find some type of risk off utility to park cash just in case reflation slows, or because everyone's kind of on the inflation theme now, right? So that's kind of when I want to start getting off it a bit. I do have a lot of small cap exposure, so I do need to try to get some larger caps. So I'm going to look at some many larger caps in Europe as I find America relatively expensive. Get out the turbulence and the reopen theme, catalyst, and start seeing the data. But I am trying to keep cash because if there's a pullback on the government stimulus, like they're talking about unemployment extra benefits finally stopping or decreasing rather, and the lower paying jobs come back, so the people that were making more on unemployment actually go back into the workforce. I'm interested to see how that works. Is it still going to be inflationary, as theory would suggest, or were they literally actually making more on unemployment and they go back to work and their actual ability to spend goes down, right? And then you have to worry about the transition period. Like, does it hand off easy? Does the government slowly whittle them off and unemployment slowly improve, right? Or is there like a sharp junction, a sharp transition that leads to some volatility that we can get some good prices on some of these higher growth names, right? But overall, I'm probably going to trim a bit of energy because I'm a little bit overweight. I have been adding to China pretty good. I still like the reopening theme. I might look at some more REITs just for some extra stability. More standard REITs, not some of the more riskier ones. But overall, I'm fairly happy with how it's structured right now. I'll probably drive some more in Africa at some point too. But yeah, I'm looking at Naspers, Imperial, ACO, and Vistra. Just there's some other ideas. So a little bit of European. Imperial's a tobacco company. But it has a really good dividend and the business appears to be staving off decline. And then I did sell ACO, but I might buy it back now. I saw Nancy Southern, the CEO, buy back some shares recently. And then Vistra Energy as well. The management reported that big loss from the storm as a power generator in Texas from Storm Uri. So yeah, a lot going on. Just a little update just to give you a thought of where I'm kind of going. Hopefully it helps. I'm probably, like I said, going to peel back a little bit of energy because I don't like to be have most of my themes under like 30K. That's just for me personally because that's my own personal situation, right? But yeah, that was my position sizes as of May 21 at 6:45 p.m. What's that, Friday night? Yep, sounds about right. All right, have a great rest of your long weekend.